Hey everyone, Tom here. I run a site called bestonlinetrades.com. The site hasn't been updated in a while. It's not about penny stocks, but this video is about a penny stock, and it's IRCE Interline Resources. It's a pink sheet penny stock. It has a relatively low trading float, and relatively low total outstanding shares. According to the pink sheets .com or OTCmarkets.com website, Interline Resources has 253 million shares outstanding as of October 3rd, 2012, and 133 million shares in the tradable float as of October 3rd, which for a sub-penny stock is pretty damn good. That's a rare find right there. You don't typically see low outstanding and low float type share structures for a lot of pink sheet sub-penny stocks. So what I'm talking about here is mostly going to be technical. I don't tend to get into the fundamentals too much. The only fundamentals I try to think about are when you have potential forward-looking events in a penny stock. Now with Interline Resources, there is the possibility of pending news on the sale of one of their oil pipelines. I don't know when or if any type of news release would come out on that. So, again, this video is really about just what I see in the technicals. Right now you're looking at the chart of IRCE all the way going back to 1993. So, this is a weekly chart. You can see that it's pretty much been all over the place here. Here's the 1999. It has this pattern of having big spikes going back into the trading range, a big spike going back into the trading range. Again, this is the weekly chart. It's had some good rallies and then it just drifts back down to where it was before. But then occasionally it had some really huge runs. This is 2005 here. It went from roughly absolute low price of half a penny, 0.005 cents, up to 45 cents. And then it based out for a year and a half, and then it went from 6 cents up to north of $3. That move took, the whole move took maybe 2.5 years. From 0.005 to $3 is an absolutely astounding move, but it took 2.5 years. The second move from 6 cents up to $3 was maybe a 9 to 9 month type move. So the IRCE has had some huge runs. The most recent run was back here in 2012. It went from a low of just under half a penny, 0.004 cents, up to about 8 to 10 cents, and that took about 2 months, a little more than 2 months. So the stock has shown that it's able to get some huge spike type moves, but also some extended moves. Moves that last for several months or even a year or years. So the question is IRCE ready to do something again? From what I am looking at, the stock is on its way to making another big move. The problem is, and and trying to figure out, what kind of move. That's most most of the time that's almost impossible to figure out. But let's just see what's happening on the daily chart here in the near term. You see that the stock, after it had the big 10-cent move here, 8 to 10 cents in April 2012, it drifted down. We had a sell-off. It's essentially just kind of flatlined in somewhat of a like a downward slope, kind of like this, like a rounding bottom formation, which is a good sign if you're looking to eventually be bullish on this stock, because you want to see a stock just have diminished selling power. And had a few small rallies here. Maximize this. You could make the argument that it made a triple bottom at 0.0004, and that final sellers were here on October 5th. So right now IRCE is trading above the 50-day moving average. Here's the 200-day at 0.007. The big story right now is the volume. We are seeing massive volume off the recent move here. 70 million shares in the last 2 days. We did about 50 million or so. And we closed at 0.0028 here. The close at 0.0028, just looking and focusing in on the near term here, was significant because this move right here came off the bottom. This was the initial move on huge volume. Then you saw price kind of hold its ground. There was an underlying bid. You had volume, sustainable volume within the last 4 or 5 trading days, and you did not see a collapse in price. So in my opinion, that means that there's an underlying bid, that you have a potential for a second follow-on advance. It's also significant that we closed at 0.0028. The high for the initial breakout day was 0.0028, so you're essentially closing right at the highs of the initial breakout day. That's pretty bullish, and that was also done on a Friday. That day right there is Friday. So in the near term, the short term, in my opinion, this has good potential of a follow-on advance here during the next 5 to 10 trading days. Now that's a short-term opinion, not a guarantee, but that's what it looks like to me. So again, the blue line here is the 50-day moving average. The red one's the 200-day moving average. The other thing I noticed is that from the past behavior of IRCE stock, when it does get up to the 200-day moving average, it's been my observation that it doesn't just go to it and reject it and collapse. It gets up there sometimes in like kind of a trickle up fashion, and then it kind of just blows the top off and overshoots it by like a rough factor of 100%. So if that dynamic is going to repeat again, then it could suggest that this is going to blast off to close to maybe 2 pennies or so, or slightly less. If that trading pattern repeats, we did see that happen several times in the past when the stock got to the 200-day moving average. Most recently that happened over here. See that here? Blasts above it here. blasts above it. The red line is the 200-day. It also happened a long time ago. Let's see. Okay, you just got to look here from 1999 to 2002. The red line again is the 200-day moving average. So you see there, gets to it, blasts above it, overshoots it. See, it's overshooting it here, big time. Now, at that time, it wasn't like a one-day affair. That took many, many weeks or a few months to finish its move. So let's go zoom in on the near term again here. Again, we seem to have this rounding bottom type pattern. Now, this is significant if you have spent any amount of time with stock analysis, then you'll come to learn that there's these four phases of a price advance. What you typically have is you have, stage one is like a base building phase. You're essentially flat. You have accumulation going on. That's like a stage one. The stock does nothing. Then you have a stage two advance, which is the markup from the base. You have the float accumulated. You got positive developments in the stock. So then you have a stage two advance. So looking at the major chart here, so here's the stage two advance. Then after the stage two advance, you get a topping process. This is the stage three top. Then after that, the selling power overwhelms the stock, and you get a stage four decline. After the stage four decline is done, you've completed the full cycle of the life cycle of that move. Then you start over and you do a stage one base again. And that's where I think we are now. We're in the stage one base phase. Okay, here's the stage one base. But now you've got this initial move, and you've got the move with big volume coming right off the bottom. When you see big volume coming right off of essentially a flat line trading range, this flat line trading range, when you see a big move coming off of a flat line base like that, there's a high probability that the move is going to have an extension. It's not just a blip on the radar. It should have some legs to it, on the premise that this is the beginning of a stage two advance. In my opinion, that is, anyway. Let's go and zoom out here again. If we look at the MACD line, the histogram of the MACD line, we do see that we are in positive territory. You see that right here? This is the histogram, the red bars here. It's the histogram of the MACD line. Recently, we are in positive territory. This is a bullish sign. You just have to look back at past history where you get initial positive MACD bars, after previously being negative, right here, for example. And it usually is a preliminary event to a big stock advance. Here we see it right there. That's where this was when before IRCE went from 0.005 to about 8 to 10 cents. We had to transfer into the positive on the MACD histogram. You just got to go back and you'll see a repeat of the same type deal. just go back to 2005, 2007. Like right here, this was the initial of the 2007 move. Here you see MACD in negative territory. Here you see it transferring positive, and then you see IRCE doing a move from 0.06 to a high of 60 cents. That correlated with positive MACD bars. So it's an important signal to watch on the daily time frame. So let's zoom out again here. Now let's look at the stochastic. The short-term stochastic looks pretty bullish here. We had that bullish crossover down here. Now we have another bullish crossover, and we have at least the possibility of getting into the power zone, which is above 90. That's a near-term bullish sign on the daily. On the weekly time frame, it also looks bullish. We have a bullish crossover stance. Again, this is the weekly time frame. On the monthly time frame, which is the bull market time frame, these are the slow-moving time frames. One price bar equals 1 month. This takes a lot of time and a lot of patience to see what transpires on the monthly time frame. So here we see stochastic in a bullish crossover stance. That was the same situation that existed back in 2007 before it had its multi-dollar move, and way in the early part of the 2005 move. So that's the monthly time frame. You can go out really far. Even the yearly time frame, which is almost absurd to even think about trading a penny stock on the yearly time frame. But even the yearly time frame looks like it could be setting up for a bullish crossover. Now, as absurd as that may sound, we're not too far until the end of the year here. And you have the stochastic on the yearly time frame looking like it could move into a bullish crossover stance. It's extremely oversold. I mean, we're way down in the bottom here. But the next time this indicator is going to have an effect is on the, January of 2013. Okay, so that's enough of the yearly time frame. Let's look at the relative strength index. On the short-term daily time frame, that's in the bullish power zone. Stochastic. Here's the relative strength. It's in the bullish power zone. It can be confusing to interpret RSI sometimes. When it is above here, it is overbought. But when you have a strong enough stock moving in a bigger, stronger trend, you tend to see RSI stay above this range for quite a while. It's in the bullish power zone on the daily time frame, so it looks constructive. On the weekly is more interesting because on the daily you could say, oh, this is already overbought, and it'll break out here, and then the stock is going to be done. Well, that could be an argument. But then when you switch over to the weekly time frame, you see that this move has barely started. 1 week equals 1 price bar. And then on the weekly, we see, RSI is at 48.5. It's right below the 50 midline. The 50 midline is critical. it really defines where bull and bear markets are existing. Under the 50 is where you tend to have bear market, extended bear market type action. Above the 50 is where you got bullish breakouts, bullish bull markets type situations. As you can see here, going back to again 2005. Let's see. You know, here the weekly RSI was above 50. Here it traded above 50, and that's where you had the biggest moves in the stock. And again, right now we're right under 50, and a crossover under 50 to above 50 is my experience a breakout sign for a stock. It's a sign of strength, and it shows that it has the legs to get an like an extended move, a bull market type move going. And again, on the weekly time frame, you can still get overbought, but that is typically way up here. So we look in the move we had to 10 cents recently, 8 to 10 cents. Hit RSI at 83 here, and then 88 right up here is the weekly time frame. So right now, again, we're still here way down at 48. So the weekly, in my opinion, has a long ways to go, and the highest price point on the weekly time frame is probably going to coincide with RSI breaking right above the 70 line. See, right here and right here. If you have the patience, that's typically where you're going to see the biggest, most explosive type upside breakout moves. So we're down here 48. You see this thing spike up here, get right under the 70. Right at that point, like within a week or two of that, or a week after, is where you see that's where you tend to see like a final blow off type move. So we could be 4 weeks away from that or more. That's the weekly perspective. On the monthly, we see that RSI is trending up. It's in an uptrend. Right now it's at 38, and I really can't say much about this. I mean, if we do see the weekly blast up above there, then you could see the monthly start to trend higher. But it's kind of difficult to work from that until we have more price data. Going back to the weekly. Now switching over to the histogram of the MACD line on the weekly. You can see here as well that the weekly MACD histogram is still in negative territory. We have not had the crossover into positive territory yet on the weekly. I could extrapolate here and say, this is maybe 1, 2, 3, 4, 5 weeks away or so before this switches over into positive, if I had to guesstimate it. But that also tends to coincide with big breakout upside type moves. You can see here the move to 8 cents that we had previously here. You had the weekly, you had the transfer to positive, and that's where you saw that initial extended breakout type move. Then it stayed positive, and then you had the final blow off here, and that coincided with about 8 to 10 cents. So the weekly is suggesting that we've got at least a month of building price action. At the very least 1 month of building price action until we reach kind of an apex of this move. Another indicator I like to look at is the Traders Index, TRIX. This is the daily time frame right now. Looking good here. Broke above the 0 line, trending higher. On the weekly time frame, you can see that it sort of has a double bottom here. You know, it's done that in the past. And more importantly, on the weekly time frame, we see that it is trying to curl up here. So, you know, just beginning. I mean, on the weekly, it's not in an upward momentum phase like right here. It's just curling over. So that says to me, I mean, not curling over, just starting to curl up. That says to me that on the weekly time frame, we're like in a transition period where weekly momentum is just starting to switch up. So, you know, if we do see the weekly RSI get well above 50 and above the 70 range, then this should really start turning up around that point as well. You know, we could be looking at here at least 2 months of a move here to the upside before things really start to peak out. That's my speculation. Just one last observation on seasonality. IRCE does seem to have a tendency to have some big moves during the end of the year time frame. September, October. That's where we saw a big move in 2005, and then going all the way to 2007. We had it peak out in end of October. It's kind of hard to find some other places that were October, so maybe that's a bit of a stretch for me to say that. Okay, I think that's about it. IRCE does tend to jump around a lot. You know, this is not for the faint of heart. It has a very sporadic type of price movement, to say the least. You know, this is a relatively low float stock, especially when you consider the fact that it's a sub-penny pink sheet stock. So also keep in mind that I am biased here. I do have a position in IRCE, but I'm just giving you my technical take from from what I can see on the different time frames. It doesn't mean that this is going to be a 3-month move just because I say it's going to be, but you know, I'm just giving you my opinion based on the way that I understand the price charts. And you know, I've looked at these things for many years, and you know, they tend to repeat themselves. Whether we get news or not, or whatever causes the move, I don't know, but the technicals are saying that the stock should be in an uptrend with a decent possibility of it being an extended uptrend, not just like a one-day blowout type move. Just to speculate a bit more, you know, but this is really speculating, but you know, what you tend to see is that initial move, or like mini breakout. Oops. Like a mini breakout. I was talking before about how it tends to blast above the 200-day moving average after it creeps up to it. So I could just speculate here and say, well, this is going to get a mini breakout up to, you know, a couple pennies just to kickstart the move. Then you see like a drift down for, you know, a month or 2 or 3, and you know, back to whatever 0.007, or back to the 200-day moving average, and then a huge follow-on advance to much higher numbers. Whether that happens, I do not know. And I got to tell you, having the patience to sit in one of these things for a long period of time, like some of the previous runs where this ran for several years to just astronomical numbers. There's not too many people that are willing to do that, um, because it's just so hard to know if a penny stock could have an extended run like that. Now, that I suppose a lot of that's going to depend on what the company's plans are here. As we get into the new year, if they have a new business initiative, that so then you kind of start to rely on the press releases and see what's going on with that, and whether you can actually believe in whatever models kind of being portrayed from management. So kind of rambled on here a bit. Again, is Tom. I do run a site called bestonlinetrades.com. Have not updated it in a while, but I wanted to take a little time out and tell you about IRCE, a low float pink sheet penny stock. Have a great one.